Welcome to S&P's European Loan Market video overview detailing leveraged finance trends and activity during December 2012. I'm Suchit Gupta, a member of S&P Capital IQ's Leveraged Commentary and Data Team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe, before winding up with themes to watch for in January and early February 2013. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the almost 9,500 contacts in LCD's Leveraged Loan Group on LinkedIn, as well as leveragedloan.com and highyieldbond.com, a free website promoting both the loan asset class as well as the high-yield asset class. We're pleased to announce the launch of highyieldbond.com, a free website promoting the high-yield asset class. On it, you'll find recent market stats, news and analysis, high yield and leveraged finance job postings, and an online primer that explains key market terms. The links to our new website and to follow LCD's social channels are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. Loan issuance was nil in December, while high yield issuance was 1.5 billion euros. 2012 loan issuance stood at 28.5 billion euros, while high-yield issuance was, for all of 2012, was 36.4 billion euros. According to JP Morgan High Yield Research, estimated inflows into high-yield funds were 245 million for December 2012, bringing the estimated 2012 year-end number to 7.2 billion euros. Secondary markets were up. Loan markets went up 51 bips to finish the month at 97.34, while high-yield markets were up 223 bips to finish the month at 103.04. In 2012, secondary loan markets were up 330 bips for the year, while the high-yield bond markets were up 13 points for the year. The S&P European Leveraged Loan Index, the LE, finished the month up 0.72% and the year at 9.48%. Both numbers are positive. However, default rates climbed higher during the month of December. Focusing on the secondary loan market, this chart details the average price of LCD's European Loan Flow Name Composite, a measure of the 12 largest, most liquid loans consisting of 10 issuers since 2002. With primary issuance at nil, the focus turned to the secondary market. Secondary loan prices rose 51 bips to finish the month at 97.34. Year-to-date, for 2012, loan prices have risen 223 bips. This next chart details the average price of LCD's European High Yield Flow Name Composite, a measure of the 12 most largest liquid high-yield issues since the beginning of the year 2010. The high-yield market finished the month up at 103.04, up 223 bips. Year-to-date, the high-yield bond market has risen 1,304 basis points, to be exact. This chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. All returns are ex-currency unless otherwise stated. The European loan market had a positive return of 0.72% for the month of December, up from 0.66% in November. The total LE return for 2012 was a positive 9.48% versus a negative 0.02% for the same period, or for all of 2011. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. December saw European monthly loan volume fall to nil as arrangers focused their attention to the burgeoning January launch pipeline, as well as closing deals that were launched in November and October. Loan issuance for 2012 stood at 28.5 billion from 105 transactions. This is compared to 43.5 billion from 140 transactions in 2011. High-yield bond issuance was 1.5 billion euros, bringing 2012 total high-yield issuance to 36.4 billion euros from 108 transactions. This is slightly ahead of the 35.7 billion euros from 103 transactions seen in 2011. The default rate by principal amount rose to 6.6% at the end of December from 6.3% at the end of November 2012. This is versus 4.09% at the end of December 2011. The default rate by issuer count also jumped up to 8.5% in December from 8% seen in November versus a 3.39% seen at the end of December 2011. Themes to watch for going forward. Strong inflows into high-yield funds continue, resulting in strong demand for high-yield issuers. Bond for loan takeouts will continue to keep a pace. Peripheral issuers, i.e. issuers from Eurozone peripheral countries, continue to access the high-yield markets and some of those countries have made their tax regimes far more amenable for issuers than before. Sell-side bankers and sponsors are optimistic about M&A, provided there are no unexpected shocks to the system. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for the other video analysis of the leveraged finance market, including U.S. loan market wrap-ups. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.